Hello traders, it's Friday, August of 25th, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instruments, we are referring to the dollar index in 4-hourly charts. So the dollar index, which measure the greenbacks rank against a trade weights basket of 6 major currencies, it was stated above break-evens on yesterday against a basket of global currency. So it was rose by 0.05% to 93.19 on the back of data showing the labor markets continue to strengthen, but gains were limited as housing data undershot expectations. So the initial claims for state unemployment benefits rose 2,000 to a seasonally adjusted 234,000 for the week ended August 19th. This is according to the Labor Department said on Thursday. So that the result was beat the economist's forecast of a 6,000 rise. So the sales of previously owned homes unexpectedly fell in July to an annualized pace of 5.44 million units and down 1.3% from the prior month. This is according to the National Association of Realtors said on Thursday as well. So the result of this data was missing the economist's estimates for 0.9% gains. So that's what the second straight months of declining existing home sales, and which is the longest streak of back-to-back decline since November 2015 as tight inventory and high prices curbed activity. So the door of economic report comes a day after US political tensions gripped the race markets. So this was prompting an uptick in safe haven demand as President Donald Trump threatened to shut down the government if he does not get funding for a war on the US-Mexico border. So the US dollars remain on track to post a narrow weekly loss against its rivals. But however, speeches by the Federal Reserve Chair Janet Yellen and European Central Bank President Mario Draghi and the Central Bank Symposium of Fridays could offer the greenback fresh direction. Meanwhile, sterling struggled to hold on gains against the greenbacks and falling a notch below break-evens, with the pair GBP USD fell 0.05% to trade at around 1.2793 on Thursday. So it was after data show UK economic growth was unrevised in the second quarter. As for commodities markets, the gold price were traded flat, fell $3.27 or around 0.25% to trade at around $1,391.42 a troy ounce amid the thin trading volume as market participants awaited close on monetary policy from a central banking symposium in Jackson Hole, which got underway on Thursdays. So the gold price traded in a narrow $6 range as traders appeared to keep their powder dry ahead of key speeches by European Central Bank President Mario Draghi and Federal Reserve Chair Janet Yellen. So Mario Draghi, however, is not expected to offer much insight into the European Central Bank's thinking on monetary policy, but traders are expected to pause Yellen's comments to gauge the Federal Reserve sentiments on a third rate hike later this year. So analysts' expectations have turned lower for a third rate hike in December following the release of the Federal Reserve minutes last week, which showing that policymakers remain concerned with this low pace of inflation. So according to the Federal Reserve rate monitor, currently just over 30% of traders expect the Federal Reserve to hike rates in December, and compared to nearly 50% in the prior rate. So the gold price is sensitive to move higher in the US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, with the West Texas Intermediate was settled lower on Thursday, fell 2% to settle at $47.43 a barrel as Tropical Storm Harvey looks set to hit the refinery hubs of the US. So this was stoking fears of an uptick in crude supplies as refineries are expected to shut down operations. So sentiment on oil futures soared as traders anticipated a rise in supplies of crude oil, and the primary input at refineries amidst expectations of refineries outage along the US Gulf Coast. Also after the US National Hurricane Center forecast Harvey was expected to be a major hurricane when it approached to the major Texas coast on Fridays. So two refineries in Corpus Christi, Texas, Flint Hill Resources, 296,470 barrels per day plant, and Chico Petroleum's 157,000 barrel per day plant was shutting down operation in preparations of the storms. So more than 45% of the nation's petroleum refining capacity is located along the Gulf Coast, as well as 51% of US natural gas processing plant capacity, according to the EIA. So the slump in the crude oil price comes a day after the Energy Information Agency, the EIA, released a report showing the supplies of crude fell for an 8th straight week. Inventory of US crude fell by roughly 3.3 million barrels in the week ended August 18th, and this was missing the expectations of a draw of above 3.5 million barrels. So the trend of falling crude supplies, however, comes against the backdrop of the rising US crude output to a more than 2-year highs. So the EIA reported that the total domestic crude production rose 26,000 barrels per day to 9.528 million barrels per day last week, which is holding at levels not seen since July 2015. So now we're gonna review the highlighted economic data and events on yesterday, as well as the focus data and event for today. So yesterday, the United Kingdom was released its second quarter growth, and it was remained the same as the economic expectations of 0.3%. Right. So besides of United Kingdom, United States was released the existing home sales for July, and it was slightly disappointed compared to the expectations of 5.57 million, and the result was at only 5.44 million. So as for today, during the European trading hours, Germany will going to release the second quarter growth as well, and it is expected to remain the same at 0.6% growth. So during the late night trading, North American trading hours, United States will going to release the core durable goods order for July, and as well as the affairs of China Janet Yellen will deliver a speech. Right. So the last two data and event tonight is the US Baker Hughes oil rig count, which expected to bring impact to the oil price, okay, and show the indications of the supply level in the United States, okay. So the last event is the speech, which will be delivered by the European Central Bank President Mario Draghi. All right. So as for today, there are two mostly anticipated events, which is Jackson Hole Symposiums and the speech delivered by the Faris of China Janet Yellen, as well as the ECB President Mario Draghi. So this was very important and might show the directions of the financial markets. Alright, it's technical analysis sessions, and first instruments we're referring to the Great British Pound against the US dollar in 4-hour digits. So the GBP USD pair remained traded in a downtrend, and the both moving average lines remains expanding downwards. So this was suggested for it to move further lower after the price closing below 1.27700. So the next support level we can refer to 1.27400. But however, referring to the MACD indicator, the both movement lines were pointing upwards. Additionally, with the momentum is weak, so it is expected to be ranging in short terms. The single currencies remain traded in an uptrend against the US dollars, but it was remain ranging between 1.17300 and 1.18200. So a price closure that out of the range is the signals for it to move slightly further towards the directions of the side is breakout. So the next resistance level we can refer to 1.19000 and support level refer to 1.16100. Referring to the MACD indicator, the both movement lines moving flat, additional with the weak momentum, so it is expected to remain ranging further in short term. Meanwhile, the Kiwi remained traded in a downtrend against the US dollar, but seems like losing momentum. So, referring to the both movement lines in the MACD indicators, which were started narrowing, so this was a signal for the pair to move slightly higher in short terms and experience retracements, right? So a price closure that's below 0.71900 is a signal for it to continue its downtrends and probably to drop further towards the next support level at 0.71500, and resistance level we can refer to 0.72700. Aussie was lost momentum against the US dollars in an uptrend and currently ranging between 0.79400 and 0.78800. So a price closure that out of the range is signals for it to move further towards the directions of the side it break out, and the next resistance level we can refer to 0.80600 and support level refer to 0.78200. As for the safe havens Japanese yen, it was remained traded in a downtrend against the US dollars and losing momentum since it failed to close below the support level of 108.500. Currently, it was ranging between 108.600 and 109.900. So a price closure that's above 110.000 is a suggestion for it to experience a short-term retracement and probably will move further higher towards the next resistance levels at 110.800. Otherwise, closure below 108.500 is a signal for it to continue its downtrends and drop further towards the next support level at 108.200. Gold price in commodities, it was remained traded in an uptrend and but seems like losing momentum and currently traded flat between $1,280 and $1,300. So price closure that's above $1,300 is a signal for it to continue its uptrend and probably will move further higher towards the next resistance level at $1,307 a troy ounce. As for the oil price, with the West Texas Intermediate price remained traded in an uptrend structures, but it was lost momentum and currently retracing and ranging between $47.20 and $48.40 a barrel. So a closure that's out of the range is the signals for it to move slightly further towards the directions of the side its breakout. So the next resistance level we can refer to $50 a barrel and support level refer to $46.30 a barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.